Pacific Asset Management to talk about what's happening in the world and how money is likely to move henceforth. Peter, great to have you on the show. Thank you for joining us. Let me start off with the entire thing with regard to the current gold rally, which you've been seeing. You've been bullish on gold for quite some time now. How do you see the rally panning out from here, barring, of course, that intermittent volatility that keeps cropping up?
Well, I think gold's going to continue to move higher, especially now that the U.S. dollar is moving lower against its fiat counterparts. In fact, I expect pronounced U.S. dollar weakness throughout the rest of this year and for many years to come. So all of that is going to drive more money out of U.S. dollars and U.S. financial assets like treasuries into gold and other non-U.S. dollar denominated investments.
Right. So, Peter, important to analyze. How is it that you see the strength of dollar? Because you've spoken about the fact that you're going to see dollar weaken this year. What would be the factors that will push the dollar lower, according to you?
Well, I think it's going to be the continued loss of confidence in the fiscal responsibility of the U.S. government and the independence of the Fed. I think you're going to see ever increasing U.S. federal deficits monetized by the central bank. So the supply of dollars is going to increase substantially. In the meantime, I think the world wants to move away from the dollar. The U.S. has weaponized the dollar, first with Biden and now with Trump. I think the world is not looking kindly at the rhetoric and the tariffs, which are making it more difficult to trade with the United States. I think the world would be better off trading a lot less with the United States. And so I think there should be more trade outside the United States, and, countries that are major exporters should consume more of what they produce rather than subsidize American consumers so that we could buy it. So I think you're going to see a major shift out of dollars. I think foreign central banks will continue to move reserves to gold and out of dollars. I think global investors will keep pulling money out of U.S. financial markets. And as the dollar goes down, I think that's going to create an economic boom outside the United States. A lot of dollar-denominated debt is going to be basically wiped out. And consumers outside the United States are going to find that they have a lot more purchasing power. So I think you're going to see, higher living standards abroad and lower living standards in the U.S.
Peter, how do you see or how do you attribute the diversification of central bank reserves? We've seen a lot of central banks now adding gold to the reserves, and for many, gold reserves are more than U.S. treasuries at this point in time.
Yeah, well, in the past, foreign central banks have accumulated dollars. I think that was a mistake. It benefited the United States, but it perpetuated these massive deficits in the United States, where the U.S. became dependent on the rest of the world. The U.S. needs the world to produce the goods that it can't and to loan it the money that it doesn't save. And, this was a big subsidy that the U.S. enjoyed, but it was a burden on the global economy. And I think the world is tired of shouldering that burden, especially since the world is being lectured by Donald Trump. And so, I think it's going to be a healthy development to move away from the U.S. dollar as the reserve currency. It's going to be very disruptive initially, but I think it's going to be a positive development for the world. In the long run, it will be positive for the U.S., but in the short run, it's a huge negative.
Right. And Peter, as the dollar relevance comes down, do you see any other currency that will likely take its place? Can the dollar get replaced?
No, there's not going to be a new currency to replace the dollar. I think the dollar is going to be replaced by gold. So I think gold is going to serve the role that the dollar had been serving as both a reserve asset for central banks and as settlement for bilateral trade. I think gold is going to play an increasingly important role in the global monetary system the way it was prior to the U.S. dollar supplanting it.
Right. Peter, another commodity which has been running, which has also seen massive highs, is silver. What is your view on silver, and how do you see this massive run-up coming in, given the fact that, many believe that there isn't much of a physical silver available in the market?
Yeah, silver prices obviously were too low for too long. Gold rose really from 2000 to 4000 without much of an increase in the silver price at all. Then silver finally caught up and probably got ahead of itself when it shot up to 121. It then pulled back below 70, and right now it's about $80 an ounce. I expect silver prices to trend higher from here, but it may take several months before we get back above the 120 level. But we're going to go above that level and ultimately much higher.
Peter, how do you see the pricing outlook for gold and silver for 2026? And do you see both the commodities hitting a new high in this year?
Yeah, but gold got almost to 5,600 before pulling back. I think that it will end the year above 6,000. We'll see how much higher, but I'm very confident that the high that we set earlier in January will be taken out probably before the end of the second quarter.
And what about silver?
Yeah, I mean, silver is going to make a new high, but obviously it's further away from its high. It's 50%. It would need a 50% move to get back to its high. Gold only needs a 10% move, so much easier for gold. But, silver is very volatile, so it's hard to say. But I do believe that silver will make a new record high, maybe by, the end of the Q2 or sometime in the third quarter of this year.
And Peter, I wonder how you look at U.S. Fed policy, given that you have a president who is pushing for lower interest rates at a time when inflation is likely to inch upwards directionally. What's the policy stance in your opinion?
Yeah, I think we have horrible fiscal policy in the United States and horrible monetary policy, which is going to get worse. So that's why gold is trading above 5,000. That's why the dollar, recently hit an all-time record low against the Swiss franc, and why it's continuing to fall now against a basket of other fiat currencies. It's because of the monetary and fiscal policy that we have been pursuing in the past and that we continue to recklessly pursue in the present.
And Peter, how do you see rising U.S. debt? Is that going to be sustainable for the U.S. going forward?
No, it's not sustainable. It hasn't been sustainable for a while. It's completely unsustainable. That's why people should be selling U.S. treasuries. That's why, China just advised banks to sell treasuries. I think Japan is going to be a major seller of treasuries. I think the whole world's going to be selling treasuries because the debt is unsustainable. It can't be repaid. It can't even be serviced. So it's going to be either default or inflation. And obviously, politically expedient choice is inflation. And that's the direction that we're headed. And it's pretty obvious. So our creditors want to get out. They don't want to watch the value of their U.S. dollar holdings inflated away. It's better to just sell now and move the money into something else.
Right. And do you see interest rates going up, given that yield is still holding up above 4.2, and you have pressure coming in from many countries selling treasuries as well?
Yeah, I think there's going to be a lot of upward pressure on treasury yields from global selling amidst a glut of supply. We have record deficits that we need to fund. We also have a record amount of debt that matures over the course of the year, and the government needs to find new buyers for the maturing debt, and they're going to be scarce. So I think the Federal Reserve is going to be coming back with more quantitative easing to buy bonds that the private sector can't absorb and doesn't want, because the alternative would be a huge spike in interest rates, which the administration clearly does not want because we can't afford it. So we're going to get massive inflation instead.
Right. Peter, but how do you look at the tariff war initiated by the US and the repercussions of it all?
Yeah, well, the weapon is aimed at Americans, and it's Americans who are going to bear the burden of these tariffs. Ultimately, their taxes on consumption in the US, they will raise the price of whatever we import and a lot of things that we don't import. I think it's more of a annoyance or a nuisance for emerging markets because it's disruptive to their, business. They now need to adjust to the US being a smaller market. So countries are going to export fewer goods into the American market because of the higher prices. Americans will still buy foreign goods. They just won't buy as much because they're going to be more expensive. But in the meantime, businesses, companies in other countries need to reorient their sales channels. They have to find consumers in other countries who are not being targeted by tariffs, where their goods may be more affordable, and they need to look more towards domestic customers. And I think that will be a lot easier with the weakening dollar, because as the dollar goes down, then customers outside the US will now be wealthier and will be better positioned to buy the goods that Americans can no longer afford.
Peter, you've been bearish on the Bitcoin, and we've seen Bitcoin, correcting in the last few months. Where do you see Bitcoin going in from here on? Do you see some kind of recovery on Bitcoin?
Yeah, I've always thought Bitcoin was more of a Ponzi scheme or pyramid than a legitimate, disruptive technology or an alternative to the US dollar or digital gold. I mean, I never bought into that hype. And I think last year pretty much exposed the fraud that Bitcoin is digital gold. Gold had its best year since 1979. And Bitcoin was down, and gold's having another great year, and Bitcoin's getting clobbered. So I think the air is coming out of the Bitcoin bubble, and that's going to, do more harm to the U.S. economy because we've invested more in crypto than any other country. Americans are more exposed to Bitcoin and crypto than any other country. And I think this is going to be very problematic for the U.S. economy. It's going to lead to, a loss of paper wealth. It's going to lead to a lot of layoffs in the crypto sector. So, it's a net negative for the U.S. So, if anybody is listening to this and you still own Bitcoin, you can still get better than $68,000 for your Bitcoin. I would suggest that you sell now while you can, while there's still people dumb enough to buy. And if you really want gold, buy the real thing. $5,000 gold may seem expensive compared to where it was, but I think it's very cheap compared to where it's going.
So, do you see a systemic risk because of a Bitcoin meltdown on the banking or the financial system?
Yeah, only in the short run. I think that was part of the reason that we saw the big drop in silver was a lot of margin related selling due to losses, probably predominantly in crypto and Bitcoin, but also to some extent silver if people came kind of late to the party relative to where we were. But yeah, I don't see any long-term disruption of other assets from, the collapse of the crypto market. But to the extent that there are lenders involved, if banks and other companies have loaned money against crypto collateral, yes, I think that they're going to suffer losses in their loans because I believe ultimately that a lot of the collateral will be liquidated at prices that don't cover the value of the loans that have been made. So that was always the risk of lending against crypto and Bitcoin. It's not very good collateral because of the lack of depth of the market and how quickly the prices could collapse. I don't even think we've seen a crash yet, a real crash in Bitcoin. I think it's coming, but it's going to be, it's going to start at a much lower level. So hard to say. Maybe once Bitcoin goes below 50,000, it'll crash right to 20,000. We'll see.
Peter, talk to us if you believe that there is a systemic risk because of Bitcoin going forward, especially for the financial system.
Now, I don't think that by itself, Bitcoin is going to take down the financial system. But, if we also get a bursting of the AI bubble, which is bigger, dollar-wise than the crypto bubble, if what happens in Bitcoin is just reflective of a broader, move out of risk assets, which could be the case. And I don't think it's so much that it goes from Bitcoin to the tech stocks and the NASDAQ. It might be that, air is coming out of all these bubbles. It's just that crypto is more vulnerable because it's got less substance. It's more of a complete bubble. At least there's some viability to the AI story, even if the stocks themselves may be overpriced and if a lot of the companies may have overinvested in building out the technology, there's something there. When it comes to Bitcoin, there's nothing there. And most of crypto, it's all pure hype. But we could see, a broader decline in risk assets that includes the stock market and, the U.S. bond market. And that would be very problematic. There's a lot of systemic risk there to the entire system melting down. But I think in isolation, if it's just crypto, then that's not the case. It's going to be very problematic for the people in crypto. And I think it is enough to tip the U.S. into recession if it's not already there. But I don't think it's enough to create, a real financial crisis. That's coming anyway, because I think we're going to get a U.S. dollar crisis, which is going to be even worse, and a sovereign debt crisis. But that's not because of Bitcoin.
Right. Peter, lastly, you spoke about AI, that valuations are rich, and some argue that there is an AI bubble as well. But what stocks, but stocks continue to hold up and rise up. Do you think a correction is overdue? In which case, what will happen to the overall equity market then?
Well, we just hit a record high, right? The Dow got over 50,000, which is not a record in any real sense because that's 10 ounces of gold. 10 ounces of gold is not, a high price. The Dow was worth more than 40 ounces of gold 27 years ago. So that's a 75% decline this century. It's not very good. So it's mostly inflation that is creating the illusion that the U.S. stock market is going up, even as in real terms it's going down. But I think U.S. stocks are ripe for a sell-off, but the dollar is even more ripe. And so if the dollar collapses, U.S. stock prices might not go down in dollar terms, but I think the pace of the decline in real terms will accelerate. So you can see the market go from 10 ounces of gold to 5 ounces of gold in a relatively short period of time, just, a couple, 2-3 years. And so that's a 50% decline from here in terms of gold.
Right. Peter, such a pleasure having you today on ET Now. Thanks for your insights.